The Arizona Department of Revenue just recently released a set of frequently asked questions on the new Arizona small business income tax. And I want to take a little bit of time today to discuss what exactly we know based on this, what's new, what's different, and how this is going to impact us here late in tax season. For those who are not aware of what's happened here, the Department of Revenue on March the 22nd published a brand new set of frequently asked questions on their website. This set of questions will be found on their website. It's a rather interesting URL to type in, but you can go ahead and type that in. Hopefully Google has now got it in their search engine. So if you search for small business income FAQ, Arizona Department of Revenue, hopefully it will now come up. Otherwise, we do have the link in a post I made to the Arizona Societies of CPAs Connect site. So you can find things there if you want to, but we have stuff there. This set of questions answers a few questions that some people had on this tax, some I think all of us did, because it wasn't clear how the department was going to handle certain things. And that it tells us how to actually file and make the election. It clarifies the fact that it does have to go in with the 140. This is basically one package. Even if it's two returns with two signature lines, it's going to go in as one package. They talk us too about what about if there's an overpayment on your Form 140, an underpayment on the Form 140 SBI. It actually talks about it either way. But let's be honest, you had no way to make a payment on 140 SBI. So the issue becomes primarily you probably had withholdings and payments made, estimated tax payments made on the regular 140. That overpayment, can we use that against the SBI or do we have to pay it separately? And finally, does Arizona recognize the concept of a superseded return? That turns out to be crucial because one of the key issues we've got with this tax is that you have to make the election prior to the original due date of the return or the extended due date of the return. The question that arises there is, does it recognize a concept similar to the feds? What if you filed your Form 140, didn't know about the SBI form, and then say, hey, wait, I want to fix that. Now, we know you cannot fix it on a pure amended return. But what if you filed your return, but there was still time left to file the original return? You just filed early, whether that early was before April 18th or that early was before October, I think it's 17th this year, because you were on extension. Do you still have until that date to make your choice? And the department's going to tell us about all of that in today's session, or I should say in this FAQ. So if we take a look at the FAQ from the department, so here is the FAQ from the department, right? It's a 4-page document, as you can see here. It's 4 pages gone, and it is just a series of questions and answers. And it goes through, and some of this is stuff that's very much we know about. But we do know a few things that are on here. This is the first page especially are things that we knew about ahead of time. They tell us about we make the election, filing it along with our timely filed income tax return, that it must be made on a timely filed return, including valid extensions. We knew that we didn't have any estimated tax payments for 2021, would be required for 2022. We also are told about the addition and subtractions, the ones that are business related to the income there. Will be deducted there. However, deductions on the federal return do not come over. Some people had noticed this. For instance, the only thing that gets moved on the federal return will be deductions that inherently land on one of the schedules. Schedule B, which there won't be any real deduction there. Schedule C, Schedule E, Schedule F, right? The 4835 farm, which is basically going to be on Schedule E anyway, and the 4797. So things like a KEO contribution, the self-employed health insurance deduction, things like that you might think are business related won't go into your small business income return. That's also crucial, and that can cause some fun with making the math work here. Now, there is one typo here. You'll notice that they ask, how do I transfer credit from Form 301 to 301 SBI? The problem is that's backwards. The question really should be the only thing you can do is transfer credits from 301 SBI, small business income tax return, back to the regular tax return. The answer actually has it right. it has in the right order. They just mistyped the question, got it in the wrong order. I've done enough writing over the years to know that it's very easy to do and very easy to miss in your proofing because you just read what you expect to read. Now, one important thing here, some people had been worried, especially because a lot of tax software vendors were having issues with how they were handling the SBI forms, and they weren't ready to file SBI. In fact, still currently, as of this instant, UltraTax apparently has been approved, but has not yet actually gotten the update pushed out. Hopefully that'll be soon. When I checked earlier, at least the check for the most recent update also did not have CCH's products listed there as being approved yet. So some people were wondering, well, can I file a 140 and then mail in a 140 SBI? Answer is basically no. When you look at this question, how do I file the new return? You are required to make an adjustment reducing income. The SBI tax return must be filed with the regular income tax return. If you don't file the returns together, the election may be denied and the adjustment to federal adjusted gross income may be disallowed. So if you had that concept of I'm going to mail in, I'm going to go ahead and electronically file the 140 and then have the client mail in the 140 SBI, you're being told in the FAQ that is probably a bad idea. And it may result in a lot of notices, a lot of back and forth, and not really something you want to do. Right? So there is the issue discussed there. They also have a little bit about this. Now, this next question is also interesting. I am a small business, and they do tell you don't really need to be a small business to claim this, but let's say you qualify. But you forgot or did not know how to file a Form 140 SBI. What do I do now? Now, you already knew you could not do this in theory on an amended return, right? Well, they're going to tell you to still use the amended return form. Some of you may be aware of the concept of a superseded return on federal tax law, right? For federal tax law, we do have this concept of a return that is superseded. That is, you replace another return. And it actually goes back to a Supreme Court decision that I like to point out actually involved filing an amended federal return because a lot of people want to fight you on superseded and claim you cannot use an amended return form to file it. I think that's erroneous guidance. Basically, the actual rule the Supreme Court came down with is a change made in the tax return before the original due date essentially replaces the original return numbers and elections and other items with that of the last return filed prior to the due date, even if that return was an amended return. Well, Department of Revenue, and I want to get this clear because the department tells you how to do this, and you don't want to go through and just write superseded on front of a paper return. That may not work the way you like it. Rather, if you look at the question here, it says I'm a small business but did not know how to file a 140 SBI. What do I do? You will need to amend your 140 by filing a 140 SBI with your amended subtractions along with filing the original SBI form. Okay, so far it's like, well, wait, just amend. Except here's the catch. Prior to the original due date of the return or the extended due date for which you had filed a valid extension. That Form 140 SBI must be filed timely for the election to be effective. So bottom line, what this means is if you file an extension on the 140 and you go ahead then and file the 140, then you later discovered, oh, wait, the 140 SBI would have been better because the client does something, as I had a client do years ago, forgetting to tell you about this partnership they'd invested in, and it threw off a bunch of income. It's like, oh, good, and suddenly that changes the whole calculation. As long as you know about that before October 15th and you are on extension, you could fix this. Now, if you don't go on extension, you have filed the 140, then you're running to April 18th. There is no way, at least federally, and I don't believe I think Arizona takes the same position, that once a return's filed, you can't get a valid extension. There's nothing to extend. So you want to make sure you filed for an extension before you file the 140. We'll discuss whether you need to wait on the 140 until after April the 18th or not. That's not clarified here. We will talk a little bit about how that worked. They also tell you how to undo it. Undoing it, you always can do it any time. The law said that was clear. They do talk about estimated payments, but they don't actually explain to us about what's going to happen next year if you pay an estimate. It turns out you didn't really need to, and now you don't want to do a 140 SBI. Can you do it? Now, a couple of interesting things here about extensions, right? This is kind of interesting. We do know that you don't have to make an extension. I should say you don't have to do a separate extension. You can make a payment for the SBI tax, and probably you may be doing so, but we're going to get a little bit of interesting aside here. One of the key issues that we've been asked about on this is how do you do it? And what happens if there is tax due? This is the key question. What do I do if there's tax due on one return and the other return's overpayment is in excess of that tax due? Do I have to pay the 140 SBI tax and then wait for the refund? And the department now answers, and I think this probably was waiting on Prop 208, because there had been a concern, I think, before that, had they allowed the netting, that this might have looked way too much like a concession, that this was a simple workaround for Prop 208, which, okay, it was, but, but was it legally? That gets a little more interesting. But you actually don't want to wave the red cape in front of the bull of the court and make it look too much like that. Now that 208 is apparently gone, I think they feel comfortable doing the netting, and they will. So if you have an overpayment on the 140, right, a tax due on the SBI, the refund will be applied to the Form 140 SBI tax due before the refund is issued. And the flip of that would be true as well. I'm hoping that means next year, if you just don't file the 140 SBI, don't make the election, you'd use the 140 SBI as a essentially refund claim, and would then be able to apply that overpayment back to the 140. So that might solve the problem some of us are having about what about the estimated taxes for the SBI versus the 140. Now, then they tell you specifically, do not send a payment for the tax due if the overpayment will cover the tax due. So, good news. If your client is overpaid, it appears all you will need to do is just file the two together. You'll get the net refund. If your client owes, but now they have too much paid in a 140 and the balance is on the SBI, it would appear this also suggests that you would just need to file the 140 SBI, or just file the 140 and make a payment on the SBI only equal to the difference you need to pay. That will be useful. Now, the other thing to note about this FAQ is they do tell you that if you have specific additional questions, you can email this address, which I did this morning. Whoops, and unfortunately, hey, I accidentally clicked it, so it thinks it wants to email now, so I'm going to undo this and click and get rid of it, so it doesn't do that anymore. But if you need specific assistance, email asktaxpolicy@azdor.gov, and which you can do. That will then take you into filing this return, or basically get you some back forth. I did have a question I raised this morning, and a couple of them, and we actually got ourselves some answers this morning, which was kind of nice. So this morning I asked two questions, and let's go back to the questions that I asked. And I printed this out so it kind of goes in between. I said, first, a taxpayer files for an extension before April 18th and before filing Form 140. Will that be considered a valid extension if you go ahead and you file the 140 after the extension is accepted but before April 18th? So I sent in my extension today. Today right now for me is here on the 23rd of March. I send in my extension today. I get the acceptance, electronic acceptance of my 140 extension tomorrow, right? So I have that, it's been accepted. And now on the 25th, I go ahead and I file my 140. Now, am I protected now? So if I need to do a 140 SBI, am I protected so I could do the 140 SBI all the way till October? Or do I need to wait until April 19th to file that 140? Because Because that's going to be the key question. Do I put it? We know for federal purposes, we have a ruling that relates to funding qualified retirement plans that takes the position clearly that once you have an extension, even if you file the return timely, right? You actually file. So you get an extension, you file the return timely, you still can take all the way to the extended due date to make your qualified plan contribution, because the argument is that contribution, the return was still extended regardless of when you filed the return. You had a valid extension. That ruling also told us if you file the return first and then try to later file an extension, that doesn't work. Okay, so that's what we had. Well, let's go back and take a look at the answer that we got. And the answer was you file a valid extension, then file some Form 140, checking the appropriate box, right? Reporting small business income on line 13. Department will suspend processing. That's interesting. Wasn't really what I asked, but it's interesting aside. So if your software can't handle the 140 SBI, you could file a 140, but it's going to sit there waiting for the SBI form. So you file the extension, you can wait on it, right? If you file the 140, file a valid extension, files 140 not indicating small business income tax return will be filed, then the amended 140X, original 140, must be filed before the extension due date. And so didn't directly address my little quirk, but seems to address it. So I would say that seems to indicate that you would get the October 15th date. Now, if you're a belts and suspenders person, you might still advise the client to file the 140 on the 19th, not the 18th, file it a day late under the extension, and then that would get you to the October date without question. Now, my other question I had for the department was, what if you file your extension April 18th with enough overpaid on Form 140 to cover the 140 SBI tax? Will the taxpayer still face late payment penalties and interest on the Form 140 SBI tax until the overpayment is offset? My concern there was we're overpaid by $10,000 and we owe $10,000 of SBI. We're overpaid by $10,000 on the 140. We owe $10,000 on the SBI. We're on extension. Now we file that return finally, get all the details together, file the return on October 15th. Will the department treat that $10,000 SBI tax as being paid back in April? That is, in essence, it was there. Or will they not count that as being paid until they have the 140 processed and they make the offset and come over? So it would be paid on October 15th, which would be 6 months late and would theoretically run you into failure to pay and failure to file penalties. So our key question was, is that going to be their way to do it, or will they do it with the October offset? And this said, regarding the penalties and entries be assessed in 140 SBI, there shouldn't be any if both forms are filed timely and the overpayment for the 140 is enough to cover tax liability on the SBI return. The department will net the two returns, and if there's not enough overpayment shown in the 140 to cover the SBI tax liability, then there may be a late penalty assessed, which I understand that totally, right? If we're short, let's say that we had overpaid by $5,000 but owed $10,000 on the SBI, I would expect to have a late payment penalty assessed, just like I'd owed $5,000 on the regular tax return. Now, the one thing to watch there is, remember, it's probably still going to be looking at the 90% rule for the extension and whether you're going to get with the extension underpayment or underpayment or late payment penalty for not paying 90% in. Remember, it's going to be you could have had 90% of the total tax in, but not 90% of the SBI, because the remaining payment, whatever balance due be there on the SBI, and that could be, let's say, 25-30% of the SBI tax, but less than 10% of the overall tax. I think you're still going to get penalized in that case. So there could be issues like that you need to watch for. So be aware of that as we go forward on these issues. Okay, as I hope to get this thing, it's always neat when the computer likes to fight you with this stuff. So in any event, this is what we have now from the department. So in any event, if you have more questions, we are going to have more information. We've been discussing this on the Arizona Society's Connect site, so you might want to tune in there, see how things are going. We'll keep open, see if anything else comes out of the department on this, but definitely we have a little more to go on now than we did before for the small business income tax, and hopefully this will at least help you get at least the extension period taken care of for filing the return. Otherwise, hopefully you enjoy the rest of your tax season, and this is Ed Zollers. If you have any questions and you're on Connect, go ahead and pop in there and we'll see what we can do. And have fun the rest of the tax season, and hopefully we'll see you all on the other side of the tax season.